Good afternoon, everybody. So my name's Jo Derbyshire. I'd like to welcome you to our fireside chat, Funding Solutions for Business. My role at Inventia is Director of Grants and Tenders, and I'm joined today by my colleagues Steve Smith, who's expert in equity funding and scale-up director, and Andrew Moon of Swoop, founding partner and head of business. So Inventia are an innovation agency supporting businesses in their growth journey. We've supported over 2,000 R&D projects, raised over 190 million in funding for clients. On an average, we generate a 14 times return on investment for our clients. Swoop is a platform that helps businesses access a wide range of funding from over 1,000 providers. Swoop is a one-stop shop for business funding, helping businesses find, compare and apply for funding from a wide range of providers. Swoop offers other services such as banking, currency, insurance, energy to help businesses save money and improve financial health. In this session today, we'll discuss some of the challenges and opportunities that businesses face when looking for funding and how Inventia and Swoop can help you find the best solution for your needs. We're also happy to take questions throughout the session, so please do pop your questions in the comments. So Steve, as I say, is our expert in equity funding at Inventia and works with clients to position them strategically to maximise chances of a successful raise. He has over 30 years' experience in the finance sector and has seen how the funding landscape has changed over time. So Steve, first question for you. Can you discuss your role at Inventia?
Certainly. Hi, Jo. Hi, Andrew. Although I've 30 years in the fundraising area, my background actually is in the computer industry, and we had a successful exit in 1999, a long time ago. Since then, I've been an interim CEO and been searching the world for tech firms to bring to the UK, interestingly enough. My role at Inventia, which I really enjoy, is twofold. I am a commercial fundraiser working with our Finance for Growth team and working with clients to help source the right sort of money from the right sort of investor source. My other role is as a scale-up director for Innovate UK, helping already successful businesses in the main grow more quickly and move from, if you like, an entrepreneurial business into a process business that can scale at speed. That's effectively where I'm at just now.
Thank you. So I think it would be helpful, Steve, if you could go through the process of fundraising for a business looking to raise funding.
Fab, yeah. At Inventia, we've developed over the past 10 years what we believe to be a very effective methodology and process for attacking fundraising. Fundraising is one of the hardest things you'll do next to moving house and getting a divorce, and it is an art form dealing with people or strangers who we want to give you money and persuade them that this is a good thing. The process is simple. It falls into two phases. The first phase is, are you ready for investment? The investor readiness process. And fundamentally, that's developing two key documents. A pitch deck, which most businesses will be familiar with, usually no more than 15 slides, but answering a few questions. What is the business? Why is it special? And how is it going to make money? And who's the team to execute the proposition? Investors look for, if you like, certain qualities and certain features. And I'll come back to that shortly. The second document that we I believe excel in, if you pardon the pun, is to develop a very effective investor-friendly projection model, projecting the value proposition in financial terms with a fully integrated P&L balance sheet over an appropriate term, typically 5 years, but it can be 7, can be 10. This is a very complex document, but it has to be simple also. And to explain that further, a projection model needs to show how the cash will come in, how it will be deployed, what it will buy, and ultimately how the returns will feature. For an investor, it's got to be easy to use, easy to understand, and easy to see what happens when, or what should happen, and as I say, where the money goes. And as I say, we've developed a very effective model that answers both complex and simple. And we find now that a lot of investors in the UK specifically trust us. When we send a model, they understand how it works, what to look for, how to see the cash flow throughout the proposition, and so on. Once we've got the client investor ready, we then move into what we call the fundraise campaign process itself. And to preface that, we run, and again, this is our secret sauce, or as of today, not so secret sauce, which is to deploy a research analyst to investigate a variety of databases in UK, European, and global investors. And the idea is to find those investors that invest in your sector at the check size that we're looking for. So, for example, an agri-tech proposition seeking £5 million, we would then go looking for who are the investors who are currently have an appetite for that kind of level of investment in that space. And we then draw up a list of about 50 and prioritize them in orders from the most likely to the least likely to. We then, in a batch process, send out the pitch deck with a compelling email encouraging the investor to open it to the first 10. And we do that in batch process, usually working through the 50 over a period of time. We also then follow up that, because we're sending these propositions to named individuals within investor organizations, because we've done our research. And in most cases, in the top 10, we usually know the organizations well enough to know the individuals. We'll call them up and socialize the proposition to make sure that they've received it, understood it, and try and find the relationship points between the proposition and their investing appetite. The key objective is to get meeting one, and the key objective at meeting one is to get a second meeting. The reason for getting a second meeting is it shows appetite from the investor. They're interested. You've got them on the hook. Let's go at the next level. That's the deep dive. That's when they get the projection model. That's when hopefully they begin a due diligence process. If they get into serious due diligence, you've reached quite a key stage, because they're spending time, money, and resources to investigate the proposition to a level of detail to satisfy their investor committees. The next stage after that, assuming you get that far, is hopefully to get what they call a term sheet. The term sheet is effectively an offer of investment. At that point, you've got a very interesting, and that's when you bring in the lawyers to legally check the terms and hopefully, with our guidance, make the right choices and understand fully what the offer means. And ideally, if you get it over to completion, at that point, everybody rejoices, the money goes into your bank, and the work really starts. And we move on to the next proposition. That is, in effect, the Inventia method, and hopefully as clear as it can be. But more than happy to spend time with any potential proposition, talking to them and helping them understand what's ahead of them. It's not easy, it's frustrating, it's despairing, and as I say, the object is to get strangers to give you money for you to spend developing your proposition. Thank you.
Thanks, Steve. That's very interesting. Good analogy there. Can you give us any examples of the kind of projects you've worked on, sort of successes that you've had?
Yeah, I mean, predominantly, Inventia is an innovation management company, and as such, the propositions we work on are developing innovation in either tech or life sciences in the main. So there's usually science involved, or software, or some kind of tech. We do look at all sectors, but I'd say our speciality really is in the tech space. And of course, AI is very much to the fore these days and beginning to creep into a lot of what we do. But as I say, the success, the big successes we've had are, as I say, software, and to make, for example, charity companies work better, smarter, and manage their systems better and more effectively, was a big success. I think we've also had good successes in the a couple of life science offerings, the advanced therapies in diabetes, for example, and as I say, a few others. It really is about the proposition and the team, and we look for clients to work with over the long term. So I'd say most of the clients we've known for quite a long time, and we hopefully take them on and go with them on their journey as they develop their aspirational business.
Thanks, Steve. That's really interesting. I'm going to ask you about your thoughts on the current state of the equity market, but I'm going to wait till Andrew's given his insights, and then I think we'll do that as a joint question, and we can all discuss that. So thank you. Andrew, could you tell us about your role at Swoop and about Swoop generally?
Here we go, everybody. Can I just say, the more questions that you ask, the more we can get you involved and get a sense of who's out there. It just makes it more engaging. So even the most, well, I'm not going to say the most stupid questions, because no one's to ask the most stupid question, but please bung your questions in. Quick overview. Swoop's just over 6 years old. The idea when we set it up was to try and have in one place a platform that SMEs from any stage, even the brand new startup through to the thing that's been around for 60 to 70 years, could look for grants, equity, debt, and business cost savings. And the idea behind it being in one place is, rather than somebody speaking to somebody just looking for equity who will say, yeah, we can help with equity, and then suddenly find that months later that they come across, well, actually the equity market's pretty hard at present, which is what Steve might say, yeah, that they're able to look at all the different solutions. You can play one area off against another, yeah, and that also means you've got a place where, as your needs and circumstances change, you've got somewhere where you've grown with it. Very quickly, going through those tranches, grants, the system matches clients based on their sector and their location across. Currently, we've got 420 live grants on the system. If it's an innovation or smart grant, guess where we send the client after we've done a bit of a chat with them? We send them to our friends over at Inventia. Yeah. But if it's a capital grant, the small ones, self-service, you see the grant, you go, wow, that's a lot of work for £5,000, I'm not going to bother. Or you go, wow, that's 30 grand, it's right up my street, you like the look of it, and you apply directly. And we give a lot of support in the grants world. Equity, we do what Steve does as well, yeah. And we work with probably the same sorts of funds, so there's a collaborative overlap. The biggest bit of work that we do is in the funding side, which is scale-up funding and debt funding. Once upon a time, people would just walk and talk to their bank. and the bank would either say yes or no. The banks are really not that interested at present, and probably won't politely say that. They might string you along. Yeah. The analogy that I would give you on the funding side is a bit like you walk into an American Walmart. The first thing you go is, wow, this is massive. You've got some dollars in your back pocket, and a personal shopper wanders up to you and says, how can I help you? And you go, actually, I'm looking to cook a meal for 15 people. Yeah. One's an alcoholic, 3 are vegetarian, 1's vegan, and they will try and work out the best meal that you can cook based on that budget. We're regulated by the financial FCA, I've forgotten what the C is, Financial Conduct Authority. Yeah. So we can submit applications, but we can't say to somebody, actually, you should be having that particular packet of Cheerios and those bagels together. That's the best solution for you. We'll be able to say, these are the solutions you can look at. And that's everything from this company that's looking for a startup loan through to 1,000,001 funding solutions. The cost, the saving side is, we've found out that very rarely does someone come onto our website because they're looking to improve their banking. But often during the course of a conversation, yeah, they'll be moaning about their current bank, etc., etc., etc. And we'll go, great. If you integrate your bank account on our system, you'll be able to see, for instance, across 9 different banks, with which bank you'd physically achieve the largest amount of savings. So it's not a theoretical, it's an actual, because we've used the data to read somebody's current bank account. So all in one place. I've given you a quick overview. I'm going to keep quiet and wait for Joe's next insightful question.
Thank you, Andrew. I'm interested to understand if you have any examples of funding solutions that companies might not be aware of.
Yeah, good. Often when people get in touch, they will say, what I'm looking for is X. They might well turn around and say, I'm just looking for a term loan, which is lending money over 5 years, which may well have an arrangement fee when it gets set up by the provider. And the rate will reflect where somebody's current business is. Okay.
Thank you.
When somebody's begun to talk to the funding team, what the funding team look to do is to get an overview of that whole business, and will then work out, like my Walmart analogy, yeah, what are the best component parts. So here's a couple of random ones. VAT funding. You're a business, let's say your quarterly VAT bill is £50,000. Yeah. You're putting aside that money on a quarterly basis. You're not using it. You're just putting it to one side to pay the VAT. Okay. I'm a funder. I lend you that £50,000. Okay. I will lend you that at a rate of interest. You're not in a contract. You might use it for 1 quarter. Yeah. And what you're doing as a business, you're going, hold on, if the cost of this 50,000 is, let's say, 10%, could I use that to go and buy stock and sell that and make 30%? Therefore, I'm 20% up. Okay. We've got a company that sells forklift trucks, yeah, who every quarter use their VAT payment, use VAT funding, and they use the money from that to go buy a new forklift truck that they sell. Okay. Another random example, there will be companies out there who've come across grants, and they will be aware that when you win a large grant, there's a need for you to put an element in for match funding. We've got lenders who will lend that match funding element. So that saves the business from having to use their cash, yeah, that they've got in the business, or for the company that's in an earlier stage is going, wow, we've now won a grant for £500,000, but we haven't got £100,000 of what we're going to do. The lender can potentially lend it. In the same sort of world, we've got people who will lend against R&D claims. And that's most often used with experience with companies that are going through the stage where they've just got their product ready to go onto market. Yeah. and they're looking to be able to spend on SEO optimization. Yeah. So they go, great, my next R&D claim, keep it simple, is 100 grand. The lender lends them £80,000 against it. They've now effectively got 80 grand's working capital, yeah, that they can use to go out there and buy leads to help the business to grow. For giving you those was just an idea to let people know that you should never have preconceived ideas. There are so many niche funders out there, yeah, who will have an appetite for what you're doing. The thing to try and always think about is imagine that you were a lender. If you were a lender, what could you lend against in order to help that business to grow? Hope that's answered the question. Back to Joe.
Thanks, Andrew. It's really interesting, isn't it? There are so many options, and it just shows you shouldn't prejudge it, really. Just because you've been turned down through one route, there might be many other routes that are available. So always worth that conversation with Swoop. So we've got a question actually from the audience before we move on. So this is from Jessie. Hello, everyone. Struggling to raise funds for our business expansion in Kenya. It's a quite hard process, as mentioned. Do Inventia or Swoop support businesses in developing countries? So I'm going to go to you first, Andrew.
We've got an office in South Africa, but that's a long way from Kenya. Jessie, is the parent company in the UK? The parent company's in the UK, we could look to help. If the parent company's in Kenya, the answer is simple no, because we don't have an office out there.
Thanks, Andrew. Steve, do you want to answer for Inventia? Do you want me to?
Yeah, it's a fairly easy answer. No, we wouldn't be involved in that. And I guess that demonstrates why we partner with such a sophisticated organization to give us that breadth and depth and optionality that I think is critical. Our sweet spot is equity investment in the 1 to 25 million space. And as I say, by partnering with Swoop, it gives us tremendous breadth to talk to a whole variety of different requirements. And as I say, typically we would use and work with Swoop closely to help give that wider service.
The other thing to say is randomly, every now and then, the British government does come up with grants for people who are working in other countries. So I can remember there was a grant recently for people working in India. There's been one for Japan. Who's to say what might come up? The word on the street is the grant world might get better if there were to be a change of government. Yes, and if there were to be a change of government, there might be more money being spent on international development. But let's see what happens sometime this year.
Yeah, so thanks. Just to add to that as well, with my grants hat on, there are bilateral competitions that Andrew's just mentioned. At the moment, there's a bilateral with Germany and another one with Switzerland, where you would partner with a company from one of those countries and the UK. There are also Innovate competitions that require collaborators in sub-Saharan Africa. So there are thematics that are announced occasionally where it could be possible to certainly help on the grant funding side. Okay, so moving on to next question. This is for you, Andrew. I've heard about an impending UK problem with insolvencies. Is Swoop in a position to help companies with poor credit?
Yes, I'll answer that in two ways. One of the things that we will often see is companies that are looking for funding will go onto the internet and will start looking at everyone who they think can fund them, make applications all over the place because they think they're being clever by applying everywhere. But what they don't realize is that is impacting their credit score. So if I'm a lender and a business comes to me and I can see that there has been, they can't see who the company applied for funding with, but they can see there have been a lot of searches. Yeah. I will be wary, and that would have affected a company's credit score. Yes, we're going through a tough time, but there are lots of businesses whose credit and financial position has been affected by the significant increase in their energy costs, the tail end of COVID, the results of Brexit, etc., who are struggling and their credit score has been impacted. We have providers, a provider who would look to repair a company's credit score. And if that isn't a good solution, but we can see that a company's got a way through, let's say a company's going, I'm looking for £500,000, let's say I'm looking for £100,000, and we find out that the way of getting that is going to be just too expensive. We might go, look, why don't we get you 20,000 now, get you into a better financial position, get you through that tough bit, improve the business, and then look again. And the type of funding that you would do for that company would be one that would reflect that you're doing that as an interim solution and then looking to review it at a later stage.
On that subject, actually, I think we're about to launch. We've been working with this firm for a while, but they deliver effectively it's Moody's analytical engine. Now Moody's credit rate countries, but they've downsized their engine to give a business solution, and it's based on open banking, which means that their credit ratings are much more accurate and pertinent, and because it's based not only on historical trading and transactions, but also on current. And we see this as a tremendous opportunity to give companies accurate credit ratings. You get it right, and of course you can then increase what you can buy from your suppliers. You can do all kinds of things, and I think this is I think a tremendous step forward where we can really offer very pertinent, as I say, accurate credit ratings, but also then help them with how to improve that as well. So watch this space with Inventia. I'm sure we'll be having a webinar on it later on in the year.
Thank you, Steve. So this is a question probably to the panel. Can you give us your thoughts on the current state of the equity market?
You happily do that. It's dreadful. It's by a huge percentage, the money being invested by what I'd call the mainstream venture capital firms in the UK is down significantly year on year. And really what they're doing is circling the wagons, and rather than doing new investments, they're investing in their existing portfolios and keeping them on track. And this is making it a very difficult market space. Some of the activities we've been doing is we've been working closely with the stock exchange and looking at accessing more sophisticated and different sources of investors who might be interested in this space. There's been a lot of movement, for example, by the UK government to harness some of the massive UK pension funds. 2.7 trillion at the is invested by UK pension funds, but however, 80% of that is invested not in the UK, unlike other giants like the USA and Germany, France, and so on, who invest the majority of their pension funds in their own country. So they're looking to harness that, and again, we should see some big movements there this year, because if we could release 5 to 10% of UK pension funds, that's a huge amount of money flowing into the investor space. So all is not doom and gloom, but yes, it's a very difficult, adverse market at the moment.
Thanks, Steve.
I'm going to say more or less the same thing and not replicate it. I will answer in a slightly different way. All of the different teams in Swoop are growing apart from the equity team. And the reason the equity team's not growing is it's just too hard at present. It's a tough one. So if you're out there looking for equity, I really would say, please just don't concentrate on equity. Be open-minded, be open-minded, be open-minded.
Yeah.
Thank you. That's interesting. So, Andrew, you've asked in the chat about the main challenges that people are facing. So please, guys, this is a good opportunity. Just pop in your thoughts and challenges in the chat. And you've got two experts here that hopefully can give you some really valuable advice. Further question from me. This is to you, Andrew, quite a specific one. Can you help clients with capital grants?
We don't help clients with capital grants. It's a self-service solution.
Okay. So whatever the size.
They get matched. So somebody creates an account, they see a capital grant, they like the look of it, you apply directly. If we were physically helping, because we're a private company, we'd have to charge for doing it, and that's just not right. You know, to charge somebody £500 for 10 hours work to win £1,000 grant, that would be bonkers, and everyone would go, wow, why are you doing that? So it's self-serve. Yeah. But some grants are easy to apply for. Some are a real pain in the butt. Have a look on the system and you find out what you got.
Yeah, agreed. So another general question to both of you, really. Out of sort of debt, equity and grant funding, which route do you think a company should prioritise?
They should always. My guidance is always to look at grants in the way that you would look at putting money in the lottery, the national lottery. You can never depend on it till you've actually got the letter of offer. In most cases, there's quite a lot of bureaucracy involved, but I think never depend on grants. It's not a good way forward. It's highly focused on your circumstances. Equity there is money still out there, and it depends on your proposition. If your proposition's in certain sectors, there's a lot of money going into what is called deep tech, and that's really AI based in investment. And there's a lot of money going into interesting developments in life sciences as well. So I think it's what is the proposition, what's the best and likeliest route. So concentrate equity, debt, mix, and grants. Yeah, by all means investigate, but don't pin your house on it.
Yeah, I concur with that, Steve. You know, as a sort of grant writing person, never rely on it because there's never any guarantee, no matter what people tell you. Having said that, if you do all the right things and your project fits and you can secure a grant, it's not only free money, although not easy money for sure, but it also acts as a really good independent endorsement of your technology and your business. So grants can transform businesses, but on the converse side, don't be one of those businesses that just relies on grants and never actually develops the business. It's a balance.
I think the mood music has changed in the UK and Europe now as well, and that they tend to be wary of companies who follow grants first and don't seek to independently finance their firms, what I'd call properly. And I think it's changed, so that they tend to view what they call the grant jockeys as not something to be encouraged at all. And so as I say, great advice. Get some guidance from the right people. I also must pull you up on, I'm not an expert. I'm just somebody who's made a lot of good decisions and a lot of equally tough decisions in my experience. And I'm quite old. And that combination, I can tell people what mistakes they might not make in future.
Thank you.
I'll answer the same question in a slightly different way. Every now and then I'll be speaking to a company and they will say, I'm only looking for grants. I'm only looking for equity. And the speech bubble at the top of my head is kind of, well, do you know what, mate? Back in the real world, you're heading for problems. You need to be open-minded. You need to look at everything. What you're doing when you set up your own business, you're doing something that's very brave, that the rewards are going to be absolutely fantastic once you get it right, but it's a rocky old road. So you've got to try and find as many allies and as many supporters along the way as possible, try and open as many doors, look at as many routes as possible. And if it turns out that you look at a route and it doesn't work, it might be that it doesn't work now and will work later on. Yeah. And if you're, let's say you were talking to somebody on the equity side and you say, and I've done this on the grant side and I've done this on the debt side, they're going to go, wow, this person has looked at it more properly, rather than somebody said, no, I wouldn't borrow anyone else's money. The equity person is going to go, what a muppet. Why would you be so close-minded? Yeah. On the borrowing money side, what I will often say to people is I will say, great, who owns most of the wealth in the UK? And they'll get puzzled and I'll go, great, people who own properties. Do the people in the UK who own properties, did they buy them outright? No, they took out a mortgage. Guess what? As a result of doing that, they've got wealth. So they borrowed somebody else's money to get themselves in a better position. Why wouldn't you want to use a specialist's money to help you to get further on with your business?
Yeah.
Good
They're
advice.
going to rip me off. Why would they rip you off? Social media, you'd be all over it. Doesn't happen.
Yeah. It's worth reading.
Keep quiet, Andrew. Okay. Yeah.
No, I was just thinking it's the book Rich Dad, Poor Dad. That's a fantastic read, isn't it? And really helps you get in the mindset for these things. Okay, so I think that's come to the end of all the questions I had. I don't know whether there's anything that either of you would like to add that we've not covered.
I wouldn't mind. Often when I'm doing one of these sorts of things, it's you, the audience out there, have come along. Yeah, there must be something you want to find out. Yeah, you've politely listened to us talk for 37 minutes and 35 seconds. Yeah, all questions for Graham. Okay. How long does it take to get funding? It depends on. Okay. I would say, Graham, and I'm half reading your question. Yeah, is often the biggest delay is the time that it takes for the person who's looking for funding to provide the financial information. So if you're looking for, do you mean debt funding? You can clarify that. If you're looking for debt funding, yeah, so long as you provide the financial information that's needed, yeah, turnaround time can be amazingly fast. Lenders out there at present, yeah, are so sophisticated with their tech, they can make decisions in really short periods of time. Equity, yep, if that's what you were asking about, it can take forever. Due to what Steve was saying, the state of Great Britain. Yep.
But talk to us, and hopefully we always like to think we won't just say no. We'll try and, at the very, very least, signpost you to talk to somebody else who might be able to help. Because all the firms started somewhere, so there are ways.
Thank you.
Marks out of 10, how well have we done? You can post a comment saying 5 out of 10, 10 out of 10. And I keep quiet again. Okay.
Yeah. No, it's fine. I think that's 10. Oh. Thanks, Danielle. Thanks, you.
You can come back. Do you want to work for Inventia, Danielle?
Thanks, Graham, for that update. Yeah, well, you're going to the right people for support, but, and feel free to contact any of us here today, and we'll be happy to talk to you in detail. Fatima, thanks, Graham. Yeah, Fatima, can you shed some light on exit strategies?
Okay. I think number one, when are you trying to exit? What are you trying to exit from? what does that entail? Do you want to see your business sold, closed, etc.? It's about assessing the situation. I'm going to be very vague, Fatima, but exit strategies is really about knowing and understanding what you want to achieve, and then shaping the future to make that happen. And again, that is one where I definitely get specialist advice, depending on what you want to do. As I say, there is no one size fits all on the exit front. And certainly we're more than happy to talk about how to manage an exit. It may be a succession planning to your leadership team. It may be an MBO. There's all kinds of things you can do. And as I say, it's understanding what you can do, but based on really what do you want to do. So sorry to be so broad, but as I say, talk to ourselves or Swoop, and we'll certainly happily guide you through the options based on the future you want to shape.
My answer to that would be, you're selling a house. You can either try and sell it privately, or you get an estate agent to come round and you say to the estate agent, look, should I do the place up? Should I paint and tidy everything? Or should I just sell as it is? The
Brilliant.
estate agent, if they know what they're doing, will be able to give you the guidance as to the best way of getting your best bang for your buck.
That's a great analogy, Andrew. Great analogy.
Thank you.
How relevant are pitch decks? Well, if you haven't got a pitch deck, you're not going to get equity.
I've done a lot of work in pitch decks over the years, and been pitched to by a lot of companies. One of the lesser known facts that's understood is when investors are scoring pitch decks, 50% of the scores are to do with the team. Okay, 50%. So, and I'll tell you why. A great team can make a poor proposition make money. Okay, the converse of that will not. A poor team won't make any money. So it's the team to execute is as important as the value proposition. And so that's where to concentrate a lot of your efforts. What are your plans, your credibility? This is where your projection modeling comes in. How do you understand your market? What are your routes to market, etc.? But it's all down to, they're going to look you in the eyes and say, can you do this? Are you up for this task? So it's something to bear in mind when you're doing pitch decks. But yeah, pitch decks are critical.
And riffing on that, a lender will look at, have they done it before? Are they making money? What's the exit? And do we get on with the team? And an acknowledgement of what they're investing in now might be different by the time that they're exiting from it. So it's the team. Do they know what they're doing? Do we like them? And can we understand what they're trying to do?
Good luck, Drew.
Thank you. And I'm sure, please don't feel any implied criticism. You probably don't need to rewrite your deck, but you do need to have one.
Yeah, it's about emphasis.
Yeah.
People forget I've got this great idea, but you need all the other bits then as well. Yeah.
Brilliant. There's been some great analogies today in this conversation. I've learned something today. I really like some of the descriptions.
Yeah. We're all estate agents now. Okay, so it looks like we've got to the end of the questions. Thank you, audience, for engaging with us and for giving us some good stuff to discuss. Happy to keep the conversation going separately. Thank you very much, everybody, for joining the Fireside Chat with Steve and Andrew. I certainly learned something new. Found it really valuable. You've got two experts here that can help you with so many options available to you. We hope to hear from you. Good luck with your funding journey, and look out for our next broadcast, which will be in a month's time. Thanks, Joe.
Thank
Thanks,
you.
Andrew. Thanks, everyone.
Bye.
Thank you.